Hey guys, welcome to this video. Just shooting an oil video now, just because the market has come up a fair way and it's a asset that's very hot in contention. If of course you have been following me for a while or you haven't, just go underneath this video, my free training. It's there. Don't forget to like, share, comment and subscribe wherever you are and share the word of trading. So what can we see? Well, I'm going to flick my time frames all the way up to the monthly nicely. Of course, as you know, oil is heavily sentiment driven. Of course, you can read in the news very easily and read between the lines about what's going on. But if we just take it back to another time where the market has spiked significantly, in other words, the price has moved so far up so quickly, you can see that takes us around the financial crisis area. And at that point, when you start to get the financial crisis, oil went up and up and up and up and up and up. And of course, it went down and down and down and down and down and down. Now, when it went down, you'll notice that it's just one fell swoop. There isn't really a significant retracement there. The retracement only comes once you fall so far. And that brought you in between your 786 fib and your 61.8. So the reason why I'm talking about that previous big fall is because we're now at a point where you've got another spike. You've got another spike that came all the way up and then got smashed all the way down. And it was just about, you had COVID time. You remember people stopped driving. There was panic. People were then giving away their oil because it cost more to store it. Hopefully you bought some. I think that was probably the best, if you could buy it, that was the best possible long you could have made ever, I would imagine. Free oil. It's now, it spiked to $130. So every barrel you got is like a free $130. You just had to wait a minute and just let it go up. So it went to $130 a barrel with the war tensions. Then it dropped, and then here we are again. Okay, we rose in a really fast shot with the new war tensions, if you like, around the Middle East, unfortunately, and that has risen the price of oil up. And then you found that, okay, well, perhaps it was a change in sentiment. Perhaps there was actually less fear about it rising, and you had a big red candle. Now, I did mention several times about buying after that fall, and I also mentioned about shorting, but more recently, it was the long side which we referred to. The reason why is because if you've got sentiment in the background that's saying, okay, well, there could be demand if there's, embargoes or whatever happens, you may find the oil price goes up. But it was mainly, if you look at that eclipse I've just drawn here, you can see there's various areas of key support. Okay, in other words, there's price action levels where we've seen rejection before, and there's tons of it here. It's like slamming into a concrete floor. Okay, the more of it, the less likely it is that price is just going to smash through it straight away, especially if you've got those lingering fears about energy. Now, it could be the case that increases and you have more fears about energy, and it causes the price to rapidly increase like before. For myself, I'm covering with hedge longs for that reason in case. I'm not going crazy, but that is just the case. Because if you've taken shorts previously on the price falling before all this started, you're probably better off protecting yourself. If you do find that the market just absolutely explodes, you'll be incredibly exposed. Okay, and there's no point. So any approach in any sense, whether it's long or short, needs to have a dedicated risk management plan. Because, like I said, in times where there's a rapid increase in market sentiment, you get a real uptick or a downtick in the price of oil. You can see after you had those tensions stop, the price then just crumbles straight down. And we thought that may happen or may occur. But you've seen previously, like I said, when the market sentiment changes so rapidly, the price can go really, really fast. So you just don't want to be on the wrong end of it, especially with a larger size. The larger your size, the more you are inherently exposed to the market, the more dangerous your trading activity is going to be. So just be careful of that. Now, if I just zoom in slightly to the daily, you can see that this push we had amongst support really didn't cause much of a pullback, but it's not really falling far either. Okay, so you can see there isn't really selling impetus at this point, although there isn't really buying impetus, and that's because the market is just deciding what it wants to do. You do have some key NFP data, key employment data coming out. You've also got Canadian data which can, affect oil. You've got net change in employment for Canada for October. Okay, that comes out in a few hours. So there's a bit of news which may push markets, but the main market sentiment that everyone's referring to is obviously the conflict that is ongoing in the Middle East. So on your weekly and your higher time frames, you should really have a long bias. The monthly doesn't look too convincing. You are coming up to a really tight range resistance. If you swap to your weekly, you can see clearly that we tried that low. And what's happening here, the reason why it's staircasing down is because it's trying each level of support that I've labeled here. And what normally happens is once you hit one level of support and there isn't that buy side impetus to keep pushing you up, the market then tries the next level. And that's why you get lower lows. Okay, because the market is hitting a low low, then it bounces up. And that's how you form your trend on all time frames. It's a testing or a continuous hit on further levels as the market continues to fall. So you have seen that. And like I said on your daily, you're not seeing too much on the downside. Now, on your 4 hour, you've got your rejection amongst this level. Okay, you can see that clearly with price. The price on this candle is now pulling back, and you've got fair levels of minor support where I've just labeled here with this candle wick. Okay, there, and these candle wicks around this area there, and these candle wicks here. So on the nearer term, clearly you've got substantive price action. So for that reason, if you are going to long this, it's okay for a long, but I would make it very small, in other words, because still there's risk in the market. You don't particularly know if the price is going to shoot up. There's loads of people who might think that's going to happen. But believe me, if you're guessing in the financial markets, you'll find you get affected awfully at times. Now, you can see slightly more what I was saying if you go to your hourly, okay, your nearer term. This big red candle is pushing you down, just like it did there, and every time it's come straight back up, okay? So anything really further down, I wouldn't be shocked if you receive a bounce. If it goes under this previous low, I wouldn't be surprised either, particularly. But all you want to do is scale your size with the risk in the market, okay? I would probably say if you do fall under this low, this further moving average underneath might be ideal for a basis for further longs in line with key price action levels, which you've seen. Again, if you have a look, you can see various areas of contention or rejection, price action within the market, okay? So it could be the case that your stock oscillator, let me just get a brush, stock oscillator peels down like that before it comes up. But definitely with the market sentiment that you've got at the moment, it is a really, really dangerous time to be trading this asset. Oil can really, really move quickly when it is spurred on by some kind of news event, okay? If it was the case that sentiment calmed down, you may see it fall significantly in line with inflation and things like that. But on the other hand, if that doesn't occur, it could be vicious. Inflation could go up. People could be paying enormous amounts for energy. Again, a massive energy crisis. We saw that in the last winter. People couldn't afford heating, etc. So there's real issues on the table because that can massively affect global economies as well. If suddenly there's a problem with oil and gas, people just stop spending money again. Companies lose money. And it's priced into the financial markets really quickly. You may find that if that occurs, stock markets fall with fears because people start to worry about it. So I hope that helps, guys. Full rundown on all of there. Don't forget to like, share, comment, and subscribe. And of course, as always, get my free training underneath. Trade light, trade safe, and I'll see you in the next one.